a single temporary difference, and we have multiple rates. At the end of 2019, Foliage Company reported taxable income of $9,000 and pre-tax financial income of $10,600. The difference is due to depreciation for tax purposes in excess of depreciation for financial reporting purposes. The income tax rate for the current year is 40%, but Congress has enacted tax rates of 35% for 2020 and 30% for 2021 and beyond. Foliage has calculated the excess of its financial depreciation over its tax depreciation for future years as follows: 2020 $600, 2021 $700, and 2022 $300. Prior to 2019, the company had no deferred tax liability or asset. And so we need to prepare Foliage's income tax journal entry at the end of 2019. And so we'll do some calculations first before I do that journal entry. We can start out with just the 2019 tax payable. And so the tax payable is going to be this $9,000 of taxable income times the current rate of 40% for $3,600. Then we also need to figure out the deferred tax liability. And so we need to look at 2020, 2021, and 2022. And we'll have the taxable amount, so we can pull those numbers down: 600, 700, and 300. And then we know the tax rates. We have 35% and then 30% for the last 2 years. And we can multiply those rates times the taxable amount. And so now we've broken down the deferred tax liability by year. And we can do a sum to add those together to calculate our total deferred tax liability at this point of $510. So as of today, we have tax payable of $3,600, but we're going to have tax expense equal to the sum of that $3,600 plus the deferred liability. And then obviously this $510 is our deferred tax liability. So in an income statement, we would, or sorry, not an income statement, our journal entry would have income tax expense, and then that would be equal to our $4,110. And then we'll have the income tax payable as well as the deferred tax liability. And we already have these numbers ready for us. The tax payable is the $3,600 and the deferred tax liability is the $510.